Hey guys, welcome to the channel. Today, we're going to be talking about ETFs versus mutual funds. Which investment play is right for you? Now, before we get into this, let's talk about what an ETF is and what a mutual fund is. So we'll start with the mutual fund first. A mutual fund is a type of investment that pools money from multiple investors to invest in a variety of securities such as stocks, bonds, or other assets. Each investor owns a share of the mutual fund, which represents a portion of the assets owned by that fund. Mutual funds are managed by professional fund managers who make investment decisions on behalf of the investors. Now, an ETF stands for Exchange Traded Fund. And as the name suggests, it is bought and sold on stock exchanges just like individual stocks. ETFs typically hold a collection of assets such as stocks, bonds, or commodities, and they trade in the secondary market. Unlike mutual funds, ETFs are not actively managed. They simply track an index or a sector. ETFs have a static portfolio of securities that is not adjusted once the ETF is created. Investors buy and sell shares of the ETF on the secondary market, just like they would buy and sell shares of a company stock. Alright, so now that we know the basics of each one, let's go ahead and talk about the differences between the two. The first difference we're going to talk about is the pricing. So mutual funds are priced only once per day at the end of the trading day. That means if you want to invest in a mutual fund, you're going to be buying it at the price at the end of the day. With an ETF, because they trade on the secondary market, their prices are updated continuously throughout the trading day, just like a stock. So with an ETF, you're going to be getting the current price, the up-to-date price. Whereas with a mutual fund, you're getting the end-of-day price. Another difference between these two is the fees. So both ETFs and mutual funds charge fees, but generally speaking, ETFs are going to have lower fees than mutual funds. This is because ETFs are more passive investments and therefore require less management. The next difference we're going to talk about is the minimum investment. There really is no minimum investment when it comes to ETFs. You can buy a fraction of a share. For example, let's say an ETF is trading at $100 per share. You don't need $100 to invest. You could invest $20. $50, whatever you want, as long as you can buy a fraction of a share, you're good to go. Whereas some mutual funds do have minimum investment requirements. It might be $1,000. It might be $3,000. It might be more. It really just depends on the mutual fund. Now, another advantage of ETFs is the tax efficiency. So ETFs are generally more tax efficient than mutual funds, because they create less taxable events. So if you're an investor who is in a high tax bracket, ETFs may be a better option for you. Now, another difference we should mention is the liquidity. So mutual funds are typically more liquid than ETFs. This is because mutual funds allow you to withdraw your money on a daily basis, whereas ETFs are only traded on business days and only during trading hours. So, in summary, ETFs are generally a better choice for most investors because of their low cost, tax efficiency, and flexibility. However, mutual funds can be a good choice for investors who are looking for professional management and who do mind the higher fees and minimum investments. Thank you for watching our video on ETFs versus mutual funds. If you found this video helpful, please like and subscribe. And if you have any questions, feel free to leave them in the comment section below. We'd love to hear from you. Thank you for watching.